Our first day in the office, Madav came in and he had a 1.5 litre thing of instant coffee and a 1.5 litre package of powdered milk. Well, that sort of set the tone. We're trying to become a well-known boutique firm that's just recognised for quality.
We're all really big on helping people pay off their mortgage faster as well.
Yeah.
And I feel like the bank's not actually incentivized to do that.
Yeah.
Right?
I think,
that costs the bank money if a client pays off their mortgage faster.
yeah. I just think it's an advice thing. No one is there confidently stepping up and giving the advice and saying, hey, the whole point of getting you in here is to help you pay your mortgage off faster.
Worth having a chat, eh?
Yeah. Team, welcome back to the next Blueprint podcast episode. We're so happy to be here again. This is going to be an awesome podcast, Rory, because we're talking all about our business.
That's right.
Sort of behind the scenes and the story to actually get to this point where we're at. I think it's important to give some people a bit more context because a lot of the time people see us online or interact with us or get referred and they don't really know the full story. So it's an awesome opportunity for us to just reflect on the last 2.5 years. And regular viewers will notice that we're got some new dicks.
Yeah, mate. We're not in Kansas anymore. Eh? We've sort of moved up in the world, so we're trying quite hard for this episode, aren't we? We've booked out Pod Labs, and it's pretty exciting to be here. And as you said, look under the hood of our own business and tell a story about our journey, which is it's a little bit of a growth story from humble beginnings to where we are now.
100%. I think it's awesome as well, to see, just talking about the podcast, what we're trying to do and educate people around our business, around the products we help people sort out, that the bosses are actually investing in us. They've put some money down to get us a nice space.
It's about bloody time, mate. This is episode 16.
It's a real rags to riches story.
Tired to say it.
Fatigued.
People don't realise the setup that goes into putting these episodes together. So it's quite nice to pull up here. And it's ready to rumble. So
we're loving it, mate. Now let's crack into it.
Yeah, mate. Well, I'm going to start things off by picking your brain a little bit. Blueprint's been around for about 2.5 years.
Yep.
And I want to just go back to the beginning, so to speak, and let you tell us about where this idea was born.
Yeah. Well, mate, it's such a journey, because the core group in Blueprint obviously have all been in financial services for quite some time. So I've been a mortgage advisor for 10 years, and it was always a dream to start a business that, offered a full suite of services, but had a bit more of a holistic planning approach to financial services, rather than just helping people buy the house, getting real intentional about, okay, how is this purchase going to help us get to the end game, retirement? And just make it the whole process of your wealth building to do with reverse engineering your retirement. So that comes into that obviously is your insurance and your KiwiSaver, a massive part of that journey. And so that was my dream. And I shared that dream with a couple of colleagues at our previous firm. And we were always talking about doing that.
Yeah, how long were the conversations?
Oh, mate, I've been nudging Madav for 2.5 years before we left.
Yeah, you didn't just wake up and launch Blueprint.
No, because obviously it's a tricky thing, and to be an advisor, you actually have to do it yourself and get a lot of clients under your belt. So I was doing our apprenticeship essentially, for those 7 years, really gathering that level of knowledge that you can confidently go out and run your own business. So that was us for quite some time. And I kept nudging him, and then...
Just Madav, right? We're talking about Madav?
I was trying anyone who... No, I was trying anyone with a pulse who wanted to go in with me. I just didn't want to do it by myself.
Yeah, you weren't going to be a solopreneur.
Yeah, exactly. Yeah, that's boring. No, so those were the key guys who shared the same values. They saw the advice process the same way that I did.
And you knew them well, right?
Yeah. And in terms of mortgages specifically and advising people on property, there was sort of this idea going on at the time at the company where we're at, where it's get as many properties as you possibly can. That was just the agenda. Leverage as hard as you can. But we took more of a holistic approach to say, okay, don't just do that for the sake of it. Understand where we're trying to get to for retirement, and then we can reverse engineer that through property investing, but maybe through some other avenues as well, your KiwiSaver and general investments.
So more of a diversified approach, not just all in on property.
Yeah, because obviously, borrowing money comes with some risks. If you can't pay it back, you could be in a bit of trouble.
Yeah.
So, we want to sort of, give people the right advice and not just say, borrow as much as you can to buy as many houses as you can.
Yeah, nice.
So that was the agenda. And those conversations kept happening. And then we sort of got to that life stage where it's not now or never, but this is the right time,
Yeah, what was the straw that broke the camel's back there? 2 years of nudging's quite a long time. You weren't that convincing.
I think they decided to move on from the firm, and they didn't know if they wanted to stay in financial advice because of maybe where things were going with their previous roles as advisors in that company. So I had already made up my mind that's what I was going to do, and the sort of set up the if you will blueprint for the business.
Yeah, okay.
Put it on the nose there, but meta. Yeah. So set that up, and then they saw it all looking there, so they said, look, we might as well have a crack at it and go for it. So went all in with those guys, me and Madav at first, and then David saw the action and he couldn't miss out, so he jumped in too.
Yeah, he got severe FOMO.
Yeah. So it started as the three of us, and it was super exciting. And the biggest challenge, because we'd done the job for so many years, we knew exactly what we had to do to get our firm set up. But the biggest challenge was actually the name.
Yeah. Well, it's one of the first things you do, right? Is you sit down, you nut out a name, and you register it.
You got to name your child.
So we were chatting about this yesterday, and you guys had some pearlers.
Yeah, oh my gosh. Yeah, so we really were. The creative juices were flowing, and we were working at a rate of knots, to get this thing up and running.
Yeah,
Madav and I back in mid 2023. So we had obviously our messenger chat where all great business ideas start on Facebook Messenger, and we're going back and forth, and we're just firing names at each other. And Madav being the more creative, the two of us, he had a few more names, and I actually went back in the chat preparing for this episode because I thought it'd be funny to dig up.
Spit it out.
Yeah. So a couple of names that we had. So we had Milestone Mortgages, which I thought was like, okay, but a bit uninspiring.
Yeah, it's a bit vanilla.
Loan to Own. Sounds a bit loan sharky, Loan to Own.
With the number 2 as well?
Yeah, with the number 2 there. Yeah, not just the letters to number 2. And my personal favourite from Madav, the Milk Group.
Yeah. Tell me more about the Milk Group.
The Milk Group. So, mortgages, insurance, lending, KiwiSaver.
Yeah, it's a good acronym. But,
so, you're nailing that. You're covering all the bases.
Yeah.
But you're called Milk, mate.
Yeah, mother's milk. You would have been a bit of a laughing stock of the industry, I think. With that,
I'm just going to go see the Milk Boys.
Yeah, Milk Financial Services.
Yeah.
But it kind of actually, that name leans into the direction that the company wanted to head from the get-go.
Yes.
Insurances, KiwiSaver, mortgages within that Milk acronym. You guys 100%. Obviously
that's
did
where it
better
was
with
inspired.
The name, I think.
Yeah. And then we kept having these back and forth based on that, thinking how can we tie a name into the fact that we're going to be covering a full suite, Obviously, we're mainly the home loans, but we want our clients to feel secure in their financial journey and know that their other products are covered too. So Blueprint Finance came up, and it was one of those moments where you see it in the chat. I don't know, probably at my desk or something, saw it in the chat, and it's just a light bulb moment like, oh, that's brilliant. And you're just praying that there's no other business name with the same name. You check on company's office, and it was just such a relief to see that we were on,
once you know.
Yeah,
right?
yeah.
So you got that light bulb moment, and Blueprint was born.
Yeah.
We're sitting in Pod Labs 2.5 years after the launch.
Yeah.
What was the first sort of 6 months like? Where did you start out?
Yeah.
Where did you work from?
No, great question. So straight away, Madav and I will be the first ones to put our hands up. You know, we were probably the most most underperforming salespeople during COVID because the working from home just doesn't work for us.
Not a lot of working.
No.
A lot of from home.
If your partner's home, you know, your best mate, you want to have some banter and
drinkies.
Yeah. And then what's going on in the fridge? You know, you got to do a bit of a stock take in the fridge. So
it's tough.
Straight away, even though we didn't have any, we just had our savings. We didn't have any revenue yet. So I've got to get a small space. So we sublet a really small room. It was, 3 meters by 3 meters. It's tiny.
Shoebox.
3 by 5, sorry. Yeah. Tiny room. Shoebox, just where we could squeeze 2 desks against the wall. We sublet it from another finance company who are friends of ours for $250 a week.
It's a steal.
It's like we were flatting.
Yes.
So we were flatting,
you were running a lean operation, eh?
Yeah, that was the main thing. And what set the tone is our first day in the office was on this Monday morning, and Madav came in and he had a 1.5 litre thing of instant coffee and a 1.5 litre package of powdered milk.
Powdered milk.
So
did the Woolworths shopping run.
Yeah, exactly. Well, that sort of set the tone. We weren't going to go buy coffees every day. We were going to have, just in case it took long for us to get our first revenue, we weren't going to have milk that could go off. We had the milk powder. And so we were buckling.
Well, that's prudent and smart. It's obviously paid off.
Yeah, we were thrifty.
Yeah. How long before you guys settled your first loan?
That's a great question. I think to get set up and everything, it takes quite a bit of time to get your FAP license.
Yeah.
So for that first month, we were prospecting, working our network, and trying to letting people know what was getting started. But we had to do a lot of that regulatory setup, which for good reason takes some time.
Yeah.
So our first loan settled about a month after the company was incorporated because it took that long for us to get set up.
It's not bad, actually.
I feel like it's a pretty good turnaround because then once we got set up, we sort of submit the application, get approved, check it off with the customer, and yeah. So that's how long it took. Yeah.
Nice, mate. And then we moved to 8 Manukau.
Yes.
That must have felt like we are on the up.
Oh, it was awesome. Yeah. Well, I think it was nearing towards the time where you came onto the scene, when we signed that lease in 8 Manukau Road.
Yep.
And we had a couple staff at that point, or we're getting to that point where it wasn't going to be just the 3 of us. We had young Jack joining the
Jack was
team.
The first hire, right?
Yeah, he was the first hire. Yeah, really keen, and he was perfect because he wanted to be a mortgage advisor, but also he was really good at the content stuff. Like he had a YouTube channel, and he'd been doing his TikTok and massive success with his Uber Eats series.
Very good.
Which it's still to this day, people come up to him in the street, talk about. I've been next to him and strangers come up to him and say, hey, we used to post about your Uber Eats runs on TikTok and how much money you can make as a driver and all that sort of stuff.
100% our barber.
Yeah.
Who cuts our hair, Brian, watched Jack Hammond's Uber Eatsing videos, and that became his side hustle.
Yeah, 100%. Yeah. He got inspired, eh?
That's right.
Yeah. And it just happened to be, he ended up being his barber. Yeah.
No, it's very cool. So there's been a lot of evolution, and change and growth in the team, which we'll talk about. But there's also been evolution in terms of the services that we provide. Because at Blueprint Finance, we all specialise in one area of financial services, and you guys started out 3 mortgage advisors. First hire was an associate mortgage advisor. We now offer KiwiSaver and insurance, and KiwiSaver came first.
Yep.
But the conversation with insurance happened first.
Yeah.
I reached out to you basically when you launched.
Yep.
You put a post on LinkedIn.
Yeah.
And I slid into your DMs, didn't I?
You did. You slid in.
And you responded pretty fast.
Yeah.
You were pretty keen.
Quick question before we get into that story. Do you think you would have slid into my DMs if we were called the Milk Group?
No chance, mate.
Maybe just a
Milk
like and moved on.
Yeah. No, it was a professional looking company when you launched, and I was quite excited to meet you, which we did.
Yeah.
Yeah.
100%. Well, going back to that story, this might make me sound a bit unorganized, but I'd actually bailed on you. Not bailed, but completely missed our catch up.
Yeah, I Ubered to the location where you had told me to meet you.
Yeah.
And as I was pulling up, you called me and said you weren't there. So I had to Uber back home, and we met online.
So what you're saying is I owe you about $30.
Yeah, about $30. Mate.
Yeah.
But that was a process in itself, wasn't it? We sort of courted for about a year.
Yeah. To see if it was the right fit.
Yeah, met the guys and started a bit of a referral relationship in the first instance.
Yeah.
And then about a year or so later, we ripped the Band-Aid on that and added insurance. But KiwiSaver was already a part of the business by that stage. So each time I came into the office, there was new people.
Yeah.
There were loan writers, and there was a KiwiSaver advisor, and it was like, okay, these guys are actually doing something very cool.
Yeah, yeah. No, it was awesome to see that, and to be honest, it didn't really feel that forced, as it was happening. We got really lucky in that it almost makes you think about things like fate and that,
you make your own luck, mate.
Yeah, well, things just sort of fell into place so well, that when we needed someone, they sort of kind of just appeared, Yeah. We did do some job ads and interviews for some of our support staff that came along with the KiwiSaver advisor at the same time, but they sort of just appeared and it was a no-brainer. So
what about the insurance? Were you courting anyone else?
No. Not at all.
Good.
Yeah. Well, because we met early on, and obviously the main thing was to push the mortgage business. And then I said to the guys, I was like, "This is the guy." And then we all met, and they were like, "No, this is the guy." And then that's how. I think we all had things to sort out, which is probably why it took so long for us to actually do the formal merger.
Yeah.
But we got there.
No, we did, and it was interesting because I had a vision when we caught up. It was about working in a boutique. I want to be a multi-service financial, like a milk company.
Yeah.
I basically wanted to be the milk factory.
Yeah, you want to be the milkman.
Yeah, that's right. And you said that's exactly what we're doing, So it was the glove fit straight away.
I think that the reason it worked so well, obviously KiwiSaver joined them, we had the full 3 services we want to offer. The reason it worked so well is because we knew from the start what we wanted to build, It wasn't this idea of we're going to get in, everyone's going to pile in, and we're going to see how it turns out. And if we want to grow, we'll hire more people. We know already today what kind of business we want to have. It's sort of like the end game stage once we're fully growth in terms of employees. And we're getting pretty close to that, which is awesome. So the goal is to have that, like you said, boutique. And it's important for us not to lose that feeling of small business,
Yeah.
When
totally.
clients interact with our business, we want them to feel like, hey, these guys are staying small. They want to put their clients first rather than they're just trying to get as big as possible so the shareholders can make a ton of money and I'm just another client.
Yeah, absolutely.
Yeah, which in financial advice that's a lot of feedback we get from customers and coming from quite a substantial business where it kind of went that way. The boutique is really important for our business model.
Yeah, 100%. And that kind of vision, having that direction from the start allows you to be deliberate with your growth decision makings, right? And it's almost like ties into the client journey that you talk about, where we sort of ask the question, where do you want to be in retirement, and reverse engineer it.
Yeah.
We did the same or have done the same in this business. Mortgage advisors need loan writers, for example.
Yeah.
And so we know where we want to get volume wise, but we're hired early.
Yeah.
So because we know that we're going to need that person when we get to that level of business.
Oh, 100%. And it's the whole adage, if you build it, they will come, So we built it, got the structure right, got a really good team cohesion. And then, when the clients came on, it didn't feel forced, It was, the experience was ready for them to have a really good experience with our business. So, which is awesome, which is why we haven't had any sort of massive letdowns or, let a client down, No,
that's right. And our turnover is 0.
Oh, we haven't lost any staff.
So we haven't lost anyone. And 3 of you guys started the company, and we did a head count yesterday. We're at 15 now, so 5x.
Yeah.
The number of people in the business in 2.5 years is not rapid growth, but we're not twiddling our thumbs either,
Yeah, for sure. Yeah. 12 full-time was it we counted? And then 3 part-time.
Yeah, correct.
Yeah.
And so tell us about the team. What's it made up of?
So we got our mortgage advisors. So we got your 4 mortgage advisors there. And we got 1 junior advisor in training, working towards 5 advisors. And then you got your insurance, mate, the man himself. And then you've got your teammate, Jackie.
Yeah.
And then we've got Jono, he's a KiwiSaver, runs his own ship.
The nice guy.
Oh,
the
man.
nicest guy.
Is he not the nicest guy in financial services?
Most trustworthy as well. Yeah. I mean, you need to be in that space.
Yeah. He's just such a sweetheart. And some clients just say, I just want a hug from him, mate. He's just the
Sometimes
nicest.
I want a hug from him.
Yeah, yeah, exactly. Well, speaking from experience, he's the greatest guy to receive a hug from. That's you just want to, you feel like you're in one of those Torpedo 7 sleeping bags. Just fully.
We digress.
Yeah. Anyway, then we've got our loan writers, that's the engine room of the mortgage business.
Yeah.
They help us with the applications. They're in the trenches with the clients. Really, really important part of the business, and they're all great. And then we got our overseas team, which help us just keep in touch with our clients our existing clients when they come up for their fixed rate reviews and that sort of thing. They help book the appointment for the advisors to get in touch, because that's quite a comms heavy task.
Yeah.
Yeah.
100%. Interesting. So 4 mortgage advisors, and one of them being the Jack Hammond YouTube,
Sensation.
YouTube sensation, Uber Eats, Inspirer, came on as an associate.
Yeah.
He's now a qualified mortgage advisor.
Yeah.
And he's training the next mortgage advisor. What a transition from him, eh?
Yeah, very cool. So, I mean, there's still obviously that oversee of the most senior,
of course,
10-year experience for the junior, but they're sort of running together like, that's this Padawan. If you think about Qui-Gon Jinn and Obi-Wan sort of set up.
Okay.
Yeah. Come on, mate.
That's not my jam, mate. I'm not following the analogy. Yeah.
Anyway, we'll add a clip in there.
Yeah, we
give
will.
some samples.
Add a little explainer. Yeah.
No, just kidding. So that's the sort of setup they're running. And it's working really well, and it's really good for the culture, right? Because you want to breed this idea in any workspace, not just in our business, of constantly learning, constantly teaching and constantly learning, because the best way to learn something is to explain to someone else, in my opinion.
Yes.
To relearn things. And it's just such a good system, eh?
No, 100%. Couldn't agree with you more.
Yeah. I want to lead into a bit about our industry and our business, because this is something you and I are super passionate about. The reason that people use advisors, the reason that we exist and the reason that we're able to, make a living doing what we do is because independent advice matters. So
Absolutely.
Help me unpack why it's so important. Rather than going direct to a product provider, why would you go through an advisor? Why is it so important to get the independent advice?
Yeah, I mean, this is the crutch of everything, right? Yeah. So if we're talking about insurance, let's use my field for an example, and we go direct to an insurance company, you're going to get access to the full suite of that provider's products.
Yeah.
Which may be okay.
Yeah.
But there could be situations, and there are situations where it's not okay. And so in the insurance space, it could be not the right product mix. The company may not offer medical insurance, for example.
Yeah.
What happens a lot is to get set up with a policies get underwritten, and which is an assessment of health and occupation and pastimes and your whole history as a person, basically. And different insurers will assess people's health differently, and it can be radically different. So from full cover standard rates, no amendments, to no cover at all, you're uninsurable.
Yeah.
So if you knock on the door of the wrong company and they say, no, you're uninsurable, you walk away from that encounter thinking you're uninsurable.
Feeling rejected. Yeah.
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 Absolutely. So,
and because you had I'm talking to you all the time, and you had a recent case study where a client, that exact thing happened. The client went to a provider and they were uninsurable, but down the road, another provider that you facilitated full cover standard rates.
100%. And that's the extreme level of it, right? And that absolutely has happened.
Yeah.
It does happen. But then there's various iterations of that where, sometimes people will have a pre-existing condition and the assessment might be a premium loading. So it's like, we'll accept you as a client, the insurer, but because we perceive extra risk on your health history, we'll charge you double the amount to, someone without your health condition.
Yeah.
And another company might not see that risk in the same way. They might see it as half as risky or not as risky at all.
Yeah.
So that can have a big impact on the cost of a policy as well.
100%. No, it's so important. And I think tying into it obviously is our role in the piece and how we get paid, because that effectively is, the whole story of independent advice and why it works together so well. So for example, you get that result for a customer and they're really happy with the outcome. They now understand all their options because you work with all the providers, and they can make the decision themselves with the facts that you're required to put out. The FMA requires you to break it down and just be completely transparent about it. They pick the solution they're most happy with, and so they're happy. They proceed, they get the policy in place, so they get the mortgage, and then we get paid by the lender or the insurer. So our income is actually tied to customer satisfaction.
Yeah, correct. Yeah.
Our income, we only get a result and an outcome for our business if we get a good outcome for our clients. Otherwise, they wouldn't proceed. Do you know what I mean?
That's absolutely right. Because we don't have the trust umbrella of the big corporation, right?
Yeah.
So if I'm going to ANZ, that's New Zealand's largest bank, there's an element of built-in trust.
Yeah.
That the banker has my best interests at heart.
Yeah.
So whereas in the intermediary space, we've got to kind of earn trust and build it through knowing what we're talking about and education, which we talk about a lot, and making sure our clients understand the advice that we're giving them, the options that they have, and empowering them to make the informed decision 100%. Themselves.
Yeah. You hit the nail on the head. It's such a good industry to work in. When you get to that level where you know your stuff, and obviously when you can get clients to help. So it's a really fulfilling process, and we're just stoked to do it, eh?
Yeah, and tell me about like the banking side of things. Say I'm just Joe Blogs, and interest rates look the same. When are the situations where your role is particularly critical? Whether it be structuring of loans, investment property, or niche situations where Bank 1 is a better option than Bank 2?
Yeah, no, that's a great question. And I think the whole advice piece ties actually into things like what just happened yesterday, like the OCR review, the official cash rate, which we were actually supposed to cover at the start of the episode. But this is actually a great intermediary to answer that
that's right.
question.
We were going to talk about those, which dropped yesterday.
It all comes into advice, right? Like when a client's trying to figure out how long to fix for, their bank directly, generally the product providers at the bank can't give that type of financial advice. So they would just give the rates and say, pick one, where it's our job. We're literally required to give a tailored recommendation for each customer and recommend a certain structure in terms of like how long to fix for as the number one thing, right? And so we're up to date with all that sort of information, and the information, for example, like the OCR review is something that would tack on them and say, okay, look, yesterday we had a 0.25% drop. This is probably going to mean interest rate's going to drop in the next 2 to 3 weeks, your fixed terms. Some clients are choosing to float now, because they they're projecting further cuts, or they think that, there's going to be a lower rate in a wee while. And it's a pretty good decision because, you can get a 5.09% floating rate right now, which is, lower than what most people are on, because rates.
Some people were coming off fixed rates and floating at a lower rate.
Yeah. And so they're not too fast to keep floating, because they think, rates are really plummeting down, which, that has been the story for the last 6 months. So we'll see what happens on that as well.
I haven't checked Slack. So Slack is our company chat, but the banks haven't moved on this OCR rate yet.
No. They've dropped their floating rate, but they haven't dropped their fixed terms.
Have they priced that in already, or are they going to drop their rates?
Well, that's a good question, because there hasn't really been a 1 year or a 6 month rate drop in the last month or so. So it'll be a bit late. It's unlikely they priced it in. So I'm expecting some further cuts on those terms, but sometimes it can take up to 3 weeks for that to be reflected. So we'll see. But that's the conversations we're having with clients right now. Some of them are keen to keep floating a bit longer because they're coming off the higher rate. So these are the sorts of conversations that, we have with our customers, and really tie that back to their long-term financial goals. Some people just love the conservative approach, like knowing what their payment's going to be, and they might want to factor in some longer term, some 2 year or 3 year fixed.
Yeah.
You're
really big on helping people pay off their mortgage faster as well.
Yeah.
And I feel like the bank's not actually incentivized to do that.
Yeah.
Right?
I think
that costs the bank money. A client pays off their mortgage faster.
Yeah. I honestly think, I don't think the bank's out here to make people take as long as they possibly can.
No.
So I know that's what we're trying to say, but I don't think they're out there to do that.
No.
But I just think it's an advice thing. No one is there confidently stepping up and, giving the advice and saying, hey, the whole point of getting you in here is to help you pay your mortgage off faster. The bank's job is to provide the quality products and compete on price. But then the next step of like trying to figure out, okay, what can I actually do to pay the bastard off? That's our job. That's our job.
Yeah.
So that's the difference and the proposition for, the mortgage side. And it gets a bit technical as well. There's instances where, bank A can lend you this much and bank B can lend you this much, Yeah. More or less. That's a super common one that we get clients coming to us and say, hey, I'm trying to get this property. And it might be that their income's totally fine, but it's just the income's a bit different. Maybe they're self-employed. And banks actually look at self-employed borrowers, in some cases completely differently.
Right.
So those are big things where if you've got a bit of a interesting situation, then advisors, it's a non-negotiable, because you really need to understand, what your options are across the lenders. And there's different products that Alder provides, just like with insurance, So that's a massive one as well.
No, 100%. And I think, lending into what we're doing here with the holistic advice and the insurance and the KiwiSaver, those lenses that we have on the market and being able to offer clients protection, access to the market, lending access to the market, and KiwiSaver, which we haven't talked about much, but access to the market, it just makes things so much easier.
Yeah.
You're not having to double share your information.
No.
It's sort of ring fence nice and tightly, isn't it?
Keep it tight, a tight scrub.
Yeah. Which is what the banks try to do, right? But, banks have their KiwiSaver portfolios as well.
Yeah.
And insurance portfolios. But banks do finance really well, and the insurance and the KiwiSaver can be lacking.
Not perfect. Yeah.
Can be lacking compared to what else is available in the market.
The truth of the matter is, it's very, very unlikely that one financial provider is going to be able to provide you mortgage, insurance, and KiwiSaver to the highest level, and also to the level that you require.
Yeah.
So that's why all of our clients that we do have all three products with, we refer to them as blueprinted clients, because they've got the full suite. Go to episode 1 to sort of learn more about that. But those clients, they're not all at one provider. They've got their mortgage here, their insurance here, and their KiwiSaver here. But when it comes to the advice and reviewing that, it's with Blueprint.
That's right. And the service just goes up. We love Blueprint clients.
Oh, mate. Yeah.
That's for those that don't know, Blueprinted is our code word for when we offer all three services to a client.
Yeah. We absolutely love it.
Yeah.
There's some hooting and hollering in the office, when we announce that someone's been Blueprinted.
Yeah, every time, mate. It's very cool. Let's move the conversation on to something different now, Daniel. And, kind of actually going back to our business, to be honest.
Yeah.
We've sort of talked generally about our industry and then about us as well. But the culture at Blueprint Finance,
Yes.
sort of what is it and how would you sum it up?
Well, have you ever seen the HBO series The Office?
Yes.
With Steve Carell?
Yes. Who's Steve Carell?
Yeah. Manav, if you're listening, you're Steve Carell.
He will be listening too.
Yeah. No, I think the culture's like the most important thing, and I think it's a good to reflect that we haven't had anyone. Obviously, we're a young business, 2.5 years, but we haven't had anyone leave the company or the team, because we make that the number one thing. So we're investing in our team constantly. In terms of who we are to the world, it's like a client-first approach, In terms of how we deal with customers and our message we want to send to our clients, it's a customer's always right approach, which is like one of our key ethoses. So that sounds
quite
like
cliche.
Yeah, mate. Thanks for calling me out on that.
Yeah.
It is super cliche, but the reason we like to say that is because it doesn't mean the customer's always right. Maybe they're wrong. But if something's important to them, they really want to get the most cash back, or, they really wanted that tiny bit off the interest rate, or they really wanted to be structured this way, even if in the big scheme of things, we know it's not a big impact or a big deal. It is a big deal. You know what I mean? Because that's the feel. It's all, when you're a service-based business, it's all about how you make people feel, So if they feel like, oh, they didn't really fight for me on that, even though it was a super, super small outcome, that's their impression of you. So what we mean by customers always right is like, those are sort of small inches that we fight for, because that's how we've grown our business, by making people feel special,
Yeah.
They've picked us out of a big group of financial advisors in the country, and we're grateful. And if it's important to you that you want that structure, that's not, not in the big scheme of things, massive, we're gonna do whatever we can to suss it.
Yeah, 100%.
And if we can't, we're gonna try and make it right. Yeah,
absolutely. When it's time to fight for our clients, we put the gloves on, don't we?
Oh, 100%. We're serious about it. And then, other than that, in the office, it's people are in the office. We don't do as much work from home, and pretty good culture. We try and do like a team event once a quarter.
Yeah,
we got the Christmas party tomorrow, and I'll be making an appearance as Santa. Well, they won't know it's me. They'll just think it's Santa.
So it's disappointing that you're not there.
Yeah, exactly. Where's Dan? Yeah, Santa didn't get to see Santa. Yeah,
no, it's good. I think it has a big impact. Because it's easy to talk about. The customer comes first, and client outcomes and all that sort of stuff.
Yeah.
But in reality, like who you are internally as a business is going to be reflected outward.
100%.
So it's really important to us, and that sort of growth and adding more people in is something that we're really conscious about, not losing our identity and not losing the culture, because it's something that, it's hard to get back.
Yeah.
Once you lose your culture.
Yeah, 100%. And I think when you're working super hard, it's easy to feel fatigued with your team. The friction can come, and because we've been doing it for such a long time, we sort of know when we're at that level, when we're at that point, and when our team's at that point. And so we do the one-on-one check-ins with everyone every quarter, to make sure that, okay, we're not actually pushing ourselves too hard, or we're not redlining this machine, and everyone's actually feeling good about showing up to work. And that's going to keep being something that we focus on as we grow as a company. But I think it's super important as well for yourself is just to check it, because you're going to get burnt out. I mean, no one's really free from burnout, and it comes as like a hidden surprise. It comes hidden as something else, and then you just realize, I've just been working non-stop for 6 months. I need to actually just chill out.
Yeah. To have a breather, eh?
Yeah, for sure. Like you with your Raro trip. It's just
I just got back from Raro, yeah. With my 1-year-old daughter, is not really a holiday, mate.
And that's been a huge part of the journey, right? Is when we first met, you were childless. You probably just found out that you guys were having Mia, right?
Yeah, well, when we launched, officially started trading the insurance business, October 1st last year.
Yeah.
Mia was born on the 4th of November.
Yeah,
so I was all in on Blueprint Finance. And there was no plan B.
Yeah, and so was Mia, obviously. She's all in.
She is, yeah. She loves it, mate.
Yeah. Let's touch on that point I just brought up, which is we're in a big pool of other finance companies, who offer our services. Like, we talk about it all the time, but for the folks at home, what actually makes it a different service? What actually makes it a special and unique service? Like, what are those things that we talk about?
Yeah, good question. I think, like all things considered equal, if you're looking at like the top companies in the country, service has got to be on point. Processes need to be sharp. Your product knowledge needs to be good.
Yeah,
you're giving good advice. But I think our key point of difference is the education side of things.
Yeah, because those first three things you mentioned, that's like the bare minimum to succeed, right?
Absolutely, yeah. And you can squeeze the juice out of that.
Yeah.
But yeah, I think we're like this podcast, we're we're learning the ropes, but we're trying to create content for our clients and for anyone else who may be interested, just about how to make smarter decisions and give people access to different material and information that's not necessarily readily available, or we're trying to make it
100%.
Yeah.
I think the most exciting thing about it is, none of us, started off with, a small loan of $1 million or anything like that. And we're all on that journey together. We've got our mortgages, we're trying to grow our wealth, and the whole idea of creating a place for people to come and meet financial advisors who are doing this every day, but are also on that journey themselves, buying real estate, buying investments, and just trying to grow in a safe way, because the unfortunate thing about this life is that you've got to take risks. It's non-negotiable. What we also always talk about with our KiwiSaver advisor, Jono, his favorite quote he always talks about is investing. I got to go in the back shelf to get this one. Investing is expensive, but wait until you get the bill for not investing.
Yeah. Oh.
Do you know what I mean?
Yeah.
So,
absolutely.
If you're not investing, if you're not taking those risks, unfortunately, you might, you're gonna have to do it in some way. And for some people, it's starting that business. For some people, it's buying that house. For some people, it's just upping the contributions to the KiwiSaver.
Yeah, absolutely.
Everyone's on their own journey, and that's actually the best thing about this, and that's why we get so pumped about the education, because we can tailor it to people at different stages. It starts from, okay, how can we actually build up that deposit for the first home, which is our next episode, and then it goes into, now you've got some equity, you've had your home for 5 years and you want to look to buy a rental. How do you do that?
Yeah.
So it's like going through those different life stages with our clients, and it's just such a pleasure to do it, eh?
No, 100%.
So I think that's how we like to, obviously like you said, the service, product knowledge, all that sort of stuff, and running a tight ship is the bare minimum. But the way we're trying to take things to the next level is with the education, with the advice,
No, absolutely. Yeah. And that's sort of like, I suppose, content and material orientated. But then the other side of it is actually like how we give the advice our strategy sessions.
Yeah, for sure.
We spoke about this because we've all put a lot of effort into those, and that's educational in terms of like how we run our processes to make things as crystal clear as they can be for our clients.
Yeah, 100%. And I think we all sort of had to do a second degree in a little thing called Microsoft Excel. I feel like I've done a whole university. I think my university degree, I've done more study on that green, that green mistress. You know what I mean?
AI has not replaced Microsoft Excel.
My second missus. Yeah, it's that green little box. We spent so much time in that to build processes where we can share advice and tailor it quite easily in front of a customer. So obviously most of our meetings were done over Google Meets for the convenience of the client.
9 out of 10 of them are, right?
Yeah. But we always offer in-person meetings, and it's really nice when you have an in-person one because you have it in the office and get up on the TV, the spreadsheet.
That's right.
And when it's on the TV, you're really looking at that spreadsheet. You
know
what I mean? Yeah.
Oh, not only with that, you get the TV, but when a client comes into the office, everybody gets up and shakes their hand.
Yeah.
It's like, holy cow, someone's in the office.
It's a bit confronting, Yeah.
I mean, it happens.
Well, it happens. You get a client in the office probably like once, I would say it's once a day, on average for that meeting room. And then whoever sees that, gets up and says hello. So that's another small business point. It's like we want to keep it boutique, keep it lean, so that when people come in, they actually know all the faces, which is quite cool.
Yeah, 100%.
Yeah.
100%. And we don't want to get too big because, if we're sort of 30 people, that's a lot of hands to shake, if you've got to shake hands of the whole office.
Yes.
There's a cutoff where it gets awkward.
Especially when it gets to me because I have a wet house, sweaty hand.
Yeah.
You know what I mean? There's going to be your hand's going to be about to fall off when you're finished with that.
No, too right. I tell you something else we do a little bit different. These buses. Have you heard about the buses?
You talking about the Blueprint Express?
Is it a double decker?
No. So we're lucky enough to have the opportunity to advertise on some buses. So, which is new for us in the way that we, spend our marketing dollars because we usually just go hard on Facebook and Instagram,
Yeah.
So this was a new one for us, bit of like a traditional 4Ps approach, and we loved it. We had such a fun time at the start because you just don't know with that sort of stuff how much traction you're going to get. But a lot of people have been talking about the buses. We're yet to have the call to say, hey, mate, I'm driving behind your bus.
Yeah. Just want to let you know.
Get me a Lipman mortgage.
We're yet Can we have a strategy session? I'm in traffic.
Yeah.
It'll come.
Yeah. So I think it's more so, we're on the bus. We're out there on the streets. We're in the trenches.
Yeah, we're in the community.
And, AT Hop has given us the blue tick. They've said these boys are good enough isn't it? So
it's a vote of confidence.
Yeah, vote of confidence from those guys. So we're loving the buses, mate. The buses are awesome.
No, it's very cool, mate.
But yeah, just trying to engage. And I think, like you said, the overall goal, we're not trying to become this massive company, but we're trying to become a well-known boutique firm that's just recognized for quality. You know what I mean? And that's something that we want to build that's going to last for 30 years, 40 years, or until the original founders retire. That's
our kids.
Yeah, they can take it over.
Children's.
Yeah, exactly. Yeah. No, so
very cool, mate.
Cool,
very
man.
exciting.
Yeah.
Let's lighten things up a little bit. Not that things aren't light. Some myth busters.
100%.
Because there's a lot of myths out there, eh?
Yeah. About our industry.
Yeah. About our industry. Yeah.
And are we doing rapid fire or are we doing?
Yeah, well, I've prepared something earlier.
Okay, brilliant.
So you must go to your bank first, for a mortgage,
like directly.
Yeah.
So, as a client, at the minute you decide you want to borrow some money, the world's your oyster. So your own bank is going to help you probably if you can get approved, and they'll probably give you a pretty good offer. But we always, when reasonable, want to go for a multi-bank approach because we want to give our clients as many options as possible.
Okay.
And a key thing of that is, especially for the pre-approval, certain banks like certain properties, certain banks will lend up to a certain amount. So if it's crunch time and you're pre-approved and you found a property and you need to buy it this week,
yeah,
it takes a bit of time to get pre-approved. So you get the property in and the loan that you need or the property you want to buy isn't suitable for that bank, well, then you got a backup.
Yeah, nice.
So should you go your own bank, I think we always want to give our clients' existing lender or existing main bank where they credit their income the opportunity to have them as a client. But the best interest of the client, we want to offer them, the market.
Give them options.
100%. Yeah.
Okay.
And I'm
All
sure
right.
you're the same.
No, 100%. All right, you throw one at me. Quick fire, mate.
Oh, so we're okay. So for the folks at home, we're going between mortgage and insurance now. So just keep that in mind. I'm covered through my work. I'm sorted, mate. I'm covered.
That's a really common one.
Yeah.
And employers that offer insurance to their people is such a good perk, because obviously it can be expensive. Some people aren't proactive about covering themselves, but often there'll be gaps in that cover. So whether it's a life insurance policy or income protection, often income protection will have like 2-year payment terms through employer packages.
Yep.
So we can top those up, fill gaps, get them 2-year wait periods to age 65 payment terms. Basically, if you have any existing insurance, part of our process is to review it all and understand where you're covered and where you're not.
Yeah.
And then we can kind of like put the pieces of the puzzle together.
Yeah.
That's how we do it.
That was such a good answer. I don't know if it was rapid, but it was so good.
We need to this is not rapid fire.
We'll just call it fire.
Yeah. Is the interest rate the only thing that matters? When I'm
I think that's a bit of a rage bait question for me because, if anyone listened to got up to this 53 minutes now, they'd know that there's so much more to your borrowing, than your interest rate.
Yeah.
It's super important because it dictates the cost, but more important is the structure, how you plan to pay the loan off, how long you're going to take to pay the loan off. If you need to use any other products, like, for example, revolving credit, offset loans, that sort of thing. Because if your loan's not set up properly, you could probably you could be on 1% lower interest rate, but if you haven't set it up properly to your goals, you'll end up paying more interest in the long run.
Yeah.
So it's not the only thing, but it's in the top 1 or 2 things.
Yeah. Obviously. It can't be the only thing, right? Because, different fixed terms have different rates, so structure is really important.
This is a really good one for young people for insurance. ACC covers everything.
Yeah, so, that's really common, right? So, Accident Compensation Corporation.
Yeah.
The clue's in the name that they cover accidents.
Yeah. And so if you fall off your Lime scooter, you get some bit of coin.
Yeah, you get a bit of ACC, bit of physio.
Yeah, exactly.
Yeah, and it's income replacement as well. ACC is awesome, right? It's compulsory. Everybody pays into it. But yeah, so that's false. And private insurance is about covering illnesses, for example.
Yes.
So ACC is really great, and we're lucky to have it in New Zealand. But
it doesn't mean it doesn't do anything if you get sick.
If you get cancer, ACC is nothing. You'll be on a sickness benefit. Yeah. And the roof over your head will be in jeopardy. Yeah. So it's a little bit. My space is a little bit doom and gloom, but I try to make it, a bit sexy in terms of like protection.
100%.
Yeah. We make it a bit more exciting, but we look at dreadful scenarios, if you like, what ifs, and then we can just like.
Well, I think, not so interrupted now, I'm just going to go on, but just like you were mentioning now, the doom and gloom thing, the thing that's so exciting about insurance and why we love it being a part of our business is that you can actually lock in your retirement, with insurance. You can say, okay, if something goes wrong, I'm still going to have X when I retire, based on this plan, based on this, or I'm still going to leave my legacy when I retire.
That's right.
So you start from today, you pay the fee, but then my legacy's locked in. you know, and there's nothing quite like it.
Yeah.
Yeah.
No, 100%.
Give me one.
Alrighty. This will be the last one, Daniel, but I'm actually going to give you a KiwiSaver one.
Cool.
All KiwiSaver providers are the same.
Shit.
Or like, well, that's pretty general.
Yeah. Well, I mean, it's false because, you know, there's so many. I think there's 60 different providers. We'll have to fact check myself. Yeah, there's quite a few different. In terms of products, there's way more than that. But there's so many different options that you can go with for your KiwiSaver, and some of them are very similar, but then there's some that are completely different. You know, so what's very trendy right now is the ones that are investing in different asset classes. For example, cryptocurrency. You know, the banks haven't really gotten into that yet. Those alternative asset classes and then the types of, you know, products that you have. So the providers aren't the same, and your advisor's a really good place to start to compare them. Really quick and simple way to just notice how different they are is to jump on sorted.co.nz. They've got a really good KiwiSaver comparison tool, and it pretty much lists out all the KiwiSavers, says their last 5-year returns, 10-year returns, their fees, and compares them. That's not the tool that we use. We use something a bit more accurate and live to present to our customers, but it just gives you an insight to say, oh my gosh, like it's such a big world out there, you know? And it's such an exciting time for KiwiSaver as well, especially if you're, you know, a young person and you're under 35 or 40 even, because what's happening now, the government's actually looking at increasing the KiwiSaver contributions. You know,
that's right.
National's brought it up, but Labor invented KiwiSaver. Hopefully they'll match that idea, because I think it's a great idea. 6% mandatory contributions. It's going to mean that people are actually sorted for their retirement. You know what I mean? Or just really set up. And it's just so crucial. Like the amount of people that I've met don't have any personal savings, want to purchase their first home, but they've got, you know, they've had the KiwiSaver for 10 years and they've got that deposit just sitting there. Yeah. What were they going to do without it? You know, I'm so proud that we've got that, you know? Yeah. And excited about the future for that.
100%. KiwiSaver is sort of like the ultimate set and forget product, and people often just default conservative fund. Yeah. They got a job, they sign up for KiwiSaver and they've never looked at it again. Yeah. And if you don't look at it and you leave it for too long, you could be leaving massive amounts of money on the table. Yeah, 100%. Worth having a chat, eh? Yeah. Mate, this has been such a awesome conversation. I've really enjoyed it. It's been so good to reflect on 2.5 years of Blueprint. And mate, we'll do another reflection episode when we hit the 100, eh? Or is it 50 maybe? I don't know. 50, mate. Yeah, 50. Yeah. But it's been great. It's been so good. And we've got the Christmas party tomorrow. Hopefully we're still employed by Blueprint. Well, the edit won't come out until next week. Yeah, so this could all be, we're no longer working at Blueprint. No, absolutely joking. It's going to be awesome. And here's to a great 2026. 100%, mate. Big things are ahead, and I'm very excited. Awesome.